Hey everybody, Derek Gilbert here with Keller Williams Realty, owner of the Gilbert Group, and I've got a great video today. I'm really excited to kind of talk about some information and really just share with you all some things that I'm seeing in the market that I don't think most people are probably aware of, and I definitely haven't seen it in the media yet. It's been an exciting year, a crazy year. This spring was absolutely insane in the Denver market, and obviously it was an election year. Just a lot of things to really impact our real estate market, and I think create a lot of misperceptions about what's going on, and just some maybe some false information that's going around out there. So I just want to clear up a few things. I want to talk a little bit about what we've seen, do a year-end recap, and really just explain to you guys what I'm expecting to see next year, what we've seen this year, and definitely in the past few months, what we've seen in the market. So let's go ahead and get started, and let's go ahead and start with price, because I think this is what most people really want to talk about first when they talk about real estate. Everybody always wants to know what's going on with the market, what's going on with the pricing, what's going on with home values. Are they up? Are they down? So why don't we just jump right in there? So right now, our median home price here in Denver is hovering right around $365 for median home price, not average home price. I always go off median because I feel like it's a more accurate indicator. Averages can be skewed by the highs and the lows. Median is just going to give us that right in the middle number and really kind of give us a clearer picture of what's going on with values. Now, here's the number most people are seeing. Right now, you can see our median home price since November of last year through November of this year, so our year-over-year analysis, is up about 11%. That's what most people hear. So here's what's interesting though. If you look at November of 2015 through June of this year, the median home price was actually up 17.5%. What we've seen is since June of this year up until current, today is December 6th, so through today, June through today of this year, we've actually seen home values pull back about 4%. And where we're seeing a lot of that is, kind of in the outlying areas. The general Denver proper market has not really seen that decline. Where we're seeing it is in more of the suburbs, right? Maybe up north in Thornton, Arvada. Down south, we're seeing that Littleton, Highlands Ranch, Parker, Centennial, areas like that. And where we're seeing the majority of this pullback in pricing is 400,000 and above. So the 400,000 and below market is still humming along great. We're seeing values doing phenomenal. We're not really seeing a pullback in pricing there. But once you start getting above 400, that's where we're beginning to see home values come down a little bit. And I think a lot of that is being driven by affordability. The other thing that really came into factor this year, obviously, was the election year. People don't tend to make huge financial decisions in uncertain times, and obviously there was a huge amount of uncertainty in our market for a lot of this year, and that started showing up in June. So I wanted to explain that so that people could really see truly what's going on with our market. Now, here's another thing you need to look at: interest rates. So this is right off of FreddieMac.com. You can go in there, pull the reports yourself. It'll show you exactly what I'm seeing here. This is the U.S. weekly averages of the mortgage market. So here's what's interesting. As I mentioned before, since June of this year through November, we've seen about a 4% decrease in home values, 400,000 and above. And when you take a look at mortgage interest rates, Brexit happened back in June. We saw rates plummet. 30 years were right around 3.5%. There was a couple days there where it went a little bit lower than that. 15 years were incredible. People were under 3%. I heard 2.65 was the lowest I heard on a 15-year. Well, look what's happened since the election. Interest rates have skyrocketed. Since the start of November, we've seen interest rates go from about 3.5% to just over 4%. So that's a 0.5% increase in interest rate. And here's how the math works. If you take a home value and drop it by 5%, that payment would be the same as if an interest rate had increased by 0.5%. So ultimately what we've seen is home values come down about 4%. We've seen interest rates go up about 0.5%. So essentially they've offset each other. So all those buyers that were waiting for home values to drop ultimately didn't see any savings in their normal monthly payment because the increase in interest rates offset that. So keep that in mind as we move into next year, because that's going to be, I think, one of the critical factors as we play into 2017 is interest rates. That is going to determine what our market looks like moving forward here. The other piece that's playing into this, and this is the last point I want to talk about, is supply and demand. What are our inventory levels looking like here in the Denver market? Well, if we go back 5 years ago, January, November 2011, our active inventory was around 32,000 homes for sale in the Denver market. Obviously, this chart, I don't think it can show any clearer what our inventory levels have done. They have plummeted, right? So we're sitting here as of today, if I pull this up, we're sitting here at an active inventory count of single-family homes in the Denver market of 6,097 homes. That is an extremely low amount of inventory for the Denver market. We need about 25,000 active homes for sale for what we would consider a balanced or healthy market. It's not a buyer's market, it's not a seller's market, it's just a balanced market. Where we're at right now, if we look at our sales rate and our monthly supply of inventory, we're at about 1.5 months supply of inventory. A balanced market would be about 5 to 6 months supply of inventory. So technically, we're still in an extreme seller's market, and we're seeing home values drop. That's the point that I want to get to, is why are we seeing home values drop over certain price points when we have a limited inventory that can't feed the supply and the demand that we have coming from buyers? And I can tell you, we're experiencing this in our business. I've got a handful of buyers we're working with right now, anywhere from 300 all the way up over 800, and we're having a hard time finding them a property, yet there's other homes out there that are sitting on the market and not selling. So this comes down to pricing. Homes that are priced right, that show well and are in great condition, are flying off the market immediately. For sellers that aren't pricing their properties where they need to be, and they're still pricing them back to this spring's values, they're the ones that are sitting on the market, they're not selling, and the market is stagnant for those types of properties. And if we look at, there was one other chart I wanted to talk about here, which is our, let's see here, our sales price to original price comparison. So take a look at this in the bottom right-hand corner. Our average sales price to original price comparison for any property that's had to do a price reduction, at least one price reduction, is 93%. So think about that. Home values drop 4%, and if they're not priced originally at the right price, they're dropping on average another 7%. So that's actually an 11% decrease in net sales price to a seller for an overpriced home. So pricing is going to be critical moving into 2017. We're definitely going to need to keep an eye on interest rates. Buyers, I would not wait, because I think this is the biggest uncertainty moving into our next market. Every mortgage lender I'm talking to, anybody that's been in the business for a while, we are all expecting interest rates to go up significantly. Sellers, this will impact you because it will impact what buyers can afford to pay for property. And in a market like Denver, where affordability is already an issue, I think that's something that could continue to potentially push values down unless the supply and demand dictates that goes up. So I hope you guys found this video informational. I know I kind of threw a lot at you, and we're talking about percentages and increases and just in general, we're talking about what's going on with markets versus home values and interest rates. So if you have any questions, you need any clarification, call me. I'm more than happy to walk you through that. That's what my team is here to do. I run a team of 5 people. We've got 2 full-time assistants. I've got my wife who does all of our marketing. We got a full-time buyer's agent. So we have 5 licensed people ready to help you with your real estate transaction. So why hire one realtor when you can hire an entire team? We'd love to help you with all your real estate needs. Give me a call. My number again, 720-480-9877. And appreciate your time. Hope you have a great day. Thank you.